Now, China has said that no one will win a trade war or a tariff war. And this comes after President-elect Donald Trump announced plans to impose sweeping tariffs on imports from China, Mexico and Canada, citing the need to combat illegal drugs and migration. Trump proposed a 10% tariff on all goods from China and a 25% tariff on products from Mexico and Canada. China is the world's largest trading country with volume exceeding $6 trillion. And this battle with the United States, which comes second, marks a critical moment in the global trade dynamics. U.S. imports close to $500 billion from China, with electronics and machinery making up for most of the volumes. Trump linked the move to his broader agenda of using trade policy to address domestic security challenges, and financial markets reacted with the Mexican peso falling over 1%, the Canadian dollar dropping 0.5%, and China's offshore yuan edging lower. In a series of posts on his Truth Social platform, Trump claimed that China failed to implement its promise to introduce the death penalty for fentanyl traffickers, which he says has allowed record levels of drugs to pour into the United States. Trump also emphasized that thousands of illegal migrants and drugs are coming into the country through Mexico and Canada, calling it a quote-unquote invasion. His announcement comes just days after naming Scott Bessent as the next Treasury Secretary. Mexico and Canada are yet to respond officially, while traders have already shown concerns through currency fluctuations. Meanwhile, China has expressed openness for dialogue. Trump's proposed tariffs build on his campaign pledge to use trade levies as a tool to achieve policy goals. His earlier proposals included a 60% tariff on Chinese imports and a 20% levy on goods from other countries to pressure manufacturers into relocating jobs back to the United States. Critics argue that these measures could strain relations with key allies and adversaries alike, while risking higher consumer costs and supply chain disruptions. Proponents, however, see that it is a necessary step to address drug trafficking and protect American borders. With Trump's inauguration weeks away, businesses and governments are bracing for a potential shift in U.S.'s trade policy. And to get us in perspective, we are now being joined by Greg Swinson, who is a chairperson of Republicans Overseas. Mr. Swinson, thank you so much for joining us on this broadcast.
Good to be here.
You know, while we were covering this story, one thing that kept popping out, especially in the Republican camp, is that Donald Trump is just fulfilling the demands he made on the campaign trail. While that is true, one would also say that he won the elections also on the lines of cost of living. So when he talks about heavy tariffs against the three largest trading partners of the United States, isn't that bound to increase costs?
Yeah, I think if that was the only metric that we measured policy on, then yeah, of course, you could argue that prices could go up. It doesn't mean that they will, but it's always a risk with tariffs. But I think the use of tariffs is really appropriate here. It was, in fact, as you pointed out, a campaign promise. So once again, President Trump is delivering on his campaign promises. We like to see that. But also, this fear of tariffs as almost like a campaign ideology from the Kamala Harris and the Biden campaign. It's not really measured economic thought. I think yes, that it could potentially increase prices, but we've seen this before. He used tariffs in his first term, and we did not see any meaningful price increases. In fact, inflation was incredibly low during President Trump's first term. So much of the inflation from the Biden administration was self-inflicted because of the reckless spending, but also the hostility to the supply side, especially to the energy sector. So I think tariffs will end up being almost a rounding error, to use the term. It will have maybe a minimal effect on prices, but if you look at the offsets, first of all, they'll be able to raise revenues from the tariffs, and then therefore be able to lower taxes on consumers. So there might be some offsetting price movements here. But more importantly, it's, as you pointed out, it's really being used to achieve some strategic objectives for the United States. And if that means that prices will come down because of other economic reforms in spite of the tariffs, that's fine, as long as the tariffs are used, tactically and strategically to achieve the president's foreign policy objectives.
All right, Mr. Swinson, you make some very interesting points. Thank you so much for joining us on this broadcast and getting us your insights.
Thanks, Ananya.
For all the latest news, download the WION app and subscribe to our YouTube channel.